What's up, guys? It's January 29th, 2024. Looks like we had a bull day, small pullback bull trend with a bullish breakout. It's kind of rare to have this threw me off. I caught some of it and then I was not playing around anymore. Yesterday we had a range day. We gapped up, pulled back into the EMA, vacuumed up to a new high, made 3 legs down, and then had a bearish vacuum into the higher time frame support, and then we pretty much oscillated for the rest of the day. Today was interesting. First 6 bars of the day are a little bit more dojis with bullish pressure. They all take place above the EMA, so that's good for the bulls. Was not expecting that bullish breakout, but there's so much bullish pressure, and bulls have been steady buying the higher time frame EMA. Last 3-4 days, every time the price came down to the EMA, it was a good buy. So that's good for the bulls. Bar 1, a range bar, had a gap up and it closed on its high. Bar 2, really bad follow through. Bar 3 and 4 is also bad follow through for bar 1. However, bar 5 gives the market a bull flag appearance. 2 seconds here. Okay, there we go. Here's that bull flag, and it has a breakout, but then again it pulls back into the EMA. This ultimately became a bull trap, and it was just a sell-off. It was a 50% pullback of bar 1's range. There's only 2 types of bars. It's either a range bar or a trend bar. This could be seen as a trend bar. This is a trend bar. This would be a range bar because there's more wicks than doji, or tails. There's more of a tail than a body, so that means it's a range bar. Bar 8 is a trap, and it traps all the bears, and it gets their 2 legs up, leg 1, leg 2, and it fails. Right now the market is range bound. Bears are shorting the highs, and bulls are buying the lows. We can see that with this 2-bar reversal here. That is a pattern Brooks talks about. But you have to think, do you want to be buying at the high of the range? Because before this happened, when this bar got put in, it was a sell vacuum down and then a buy vacuum higher. So could be risky buying this. If you don't scalp out, you will get caught up. I got caught up. Bar 10 was bad breakout, bad follow through for bar 9 because there's lots of overlap. Bar 10 filled this candle's wick, but it didn't really make a new high, and then we get a micro double top of bar 11, shooting through the EMA and going for a few legs lower. Let's see if this bar got a measured move down. Turn off these prices. This bar did not get a measured move down from a breakout perspective, and if you pull the wick, it obviously did it as well. But let's see, how about from leg 1, leg 2? But look at that, from leg 1, leg 2 to the tick. If you didn't front run, you would get trapped, but you also have a chance to get out on bar 19. So this bar 11 was good for another leg down, and that came in the form of leg 1, small pullback. So I'd say this is leg 1, pullback leg 2, deep pullback leg 3, deep pullback leg 4, and that's just me counting the opposite bars. There's multiple ways to count legs. I would suggest you find what works for you. I like to count opposite bars because it makes it easy to spot, and it's easy to talk about. So here is a leg 1 trend line break leg 2, and that comes in the form of an opposite bar. See this wick right here? This is another leg, but it's an implied leg, so that might be a little bit harder to talk about if you were talking oh yeah, there was 2 legs after bar here, bar 65, and someone might say, well, that's still a bull bar on the 5-minute chart. It is on a lower time frame. If you guys watched the Brooks Blue Book review, this is a channel break and bull flag on a lower time frame, so that's a good buy. Bar 19, buy the EMA. I think this is a risky buy with this much selling pressure. Just as the market slung up, I think it could also shoot down. So I ended up buying bar 24. I bought bar 24 for a leg 1, leg 2 move like this. I didn't use this tool. I was just going for 5 points today. It worked though. You could use a tool here. You could put it here. You could put it here. I think if you were going to buy the lows here, it would be more of a range play, and your target could be the high of this bar, the high of this bar, or the 50% of this big bear bar on 11. Bulls get two legs, leg 1, pull back leg 2. They are asymmetrical. Pull back leg 3, pull back leg 4. This is the pullback, excuse me. And then bears get a sell vacuum into the EMA. All the bear bars touching the EMA ended up being good bear traps. Excuse me. Ended up being good bear traps. And then we can see a bull flag forming overall here. Pullback, double bottom bull flag. EMA is acting as support. We have the higher time frame EMA right under it. However, we don't have this part of the day yet when we see this. And this does look like a 2-bar rejection at highs if we draw that line here. If you took this short, I would really get out of shorts around these couple bars because we can see the wicks. There's been a lot of bullish pressure. There's two types of things we can look at in terms of market control. And what I mean by that is there could be control over time or control over price. This is control over time. Bulls have control over time here. See how much time will they spend above the EMA? Whereas control over price would be the bears right here, the bears right here. So I like to say control over time is a little bit more important than control over price. And if I was to try and prove that to you, I could say, well, look, if the bears are really in control, why did they buy the EMA? Why are bulls buying EMA? So it's something to think about if you're getting trapped on the EMA. Is, are you buying a pullback? Are you shorting lows? I thought this wasn't recording. I was like, oh no, it's recording. We're good. So back to what I was saying. So if you're short here and you're like, oh, why isn't this a good bear breakout? The bears are strong, 2-bar reversal. We're trading at range highs. I agree with you. I took a quick short and I got out very quickly because of control over time. The bulls have more control over time. The higher time frame EMA is being respected nicely through multiple days, not just today. Failed breakout here, failed breakout here, failed breakout here, failed breakout here, here. All these wicks that break the channel lines equals bull flags on smaller time frames. We might not be able to trade them on the 5-minute, but they are bull flags and they are being traded on a smaller time frame. Here we have another form of a bull flag, pullback. It's more of a triangle bull flag now. The market is in breakout mode because there's three pushes higher. 1, 2, 3, 4. Here's one push. So push 1, push 2, push 3, push 4, push 5 was the breakout. Triangle. When you see a triangle, whether it's from a bear flag or a bull flag, the triangle that's breakout mode and it's best to wait for 2-bar follow through. So if you bought bar 58 with a stop here, that's a good breakout. They get their second leg. Here's another bull trap. This ended up being a pullback, testing the highs of this bar. Bar 65 is a good buy. Bar 66 is an indecision bar. And I wouldn't even be mad if you got out because this looks like a wedge top. I really was not expecting that breakout. I was in the breakout because I had bought this bar or I had bought this bar or one of these bars and I held for the test of this high. There's that wedge top, or you could say 3 pushes up here. When we have 3 pushes up, it's a 50% chance we break out of one side and another 50% chance we fail. So 50% chance we break out, 50% chance we go up. The other option could be 50% chance breakout, 50% chance failure, breakout, or pullback and break down. So pretty nice breakout. Breakouts generally surprise one side. I was feeling more bearish today, but I don't know if you guys saw like the community post. I had said, do you guys think this is a double top or do you think we're going to pull back? Or excuse me, I said, do you think this is a double top and we pull back? Or do you think we're going to go higher? Phoenix left a comment saying he's more bullish, and he was right. He said there's a lot of bullish pressure. There's that double top. A double top is a reversal pattern and a breakout mode pattern. And what I mean by that is if bears get short here, they're going to put their buy stop orders here. A buy stop order for a bear getting short is just a stop. So the market saw this as a double top because it is a double top. However, it broke out. It had a bullish breakout. So keep that in mind. Double bottoms can also have bearish breakouts because when bulls buy a double bottom, their stop goes below. And a bull's stop is a sell order, which is bearish, which is like bearish. If you have a sell order in the market and it gets hit, that's bearish sentiment. So every pattern can break out or it could fail. Every bar is a breakout except for inside bars. Good job, Phoenix, on that call. And with that being said, I also made the comment, I'm going to trade what I see. So although I was bearish, I still was long because that's what the price action said to do. I think that's really important to understand, because previously, if I think it's short, I would just go short. And I'm sure some of you got trapped today. I hope most of you got out, but I mean, the market's 50-50, so trade what you see, not what you want to see. And yeah, you do see a double top here, but I mean, where's the selling if it's such a good double top? So bar 67, 68, really strong breakout. It was a 13-point breakout. I measured it. Yeah, 12.5. Or if you want to go from here, it could be about 15. And then you want to see a measured move. I scalped a little bit here, but I was really uncertain if this was going to fail because I just was uncertain. So I was just scalping a little bit. But it was a good buy. You could buy the close. If you buy the close, I would, if you bought this close and your stop is down here, I would definitely hit out very quickly or be ready to buy more here and here. And the reason I took those two places off was because that's range bound price action. Let's talk about that actually. What makes a good trend? We could tell how strong a trend is by how deep the pullbacks are. Wait a minute. What's going on here? Oh, okay. Hold on. There's the line. I'm gonna put this here so you guys can see this line, but this line, I'm looking for this line here. That line, it's lining up with the high of the day. So I'm gonna offset it just so we can talk about it. So pretend this line is down here and that line's supposed to be where it's supposed to be. When we have a strong breakout, we could tell how strong it is by the depth of the pullback. This is a 30% mark. We could have 50%, 70%, and just the deeper it goes, the weaker it is. 30% is about what you want to see in a strong breakout, and that's what they got. Sell orders were put here, breakout leg 1, leg 2. Here's a wedge top, reversal, and a pullback. Bears made money, so we could say the market's already range bound. When we talk about the market cycle, it's breakout, channel, range, breakout either side. So the market cycle reset. The market cycle reset with the breakout, and then they're getting the channel. Spike and pullback is another name for it. And then it'll be interesting to see what happens tomorrow. Daily chart. I was updating the weekly chart with the levels, like the weekly high, then the weekly low. And I just decided I'm going to start pulling fibs instead because it's just simpler and I can get 50% and I can get projected moves easier. So I'll just do it with you guys real quick. Delete that. I went like here. What was the weekly bar? This is today. So I go to the weekly high. I pull down here. I have the template. What is it? That one. And then I went like this. I added the 50% level. I took off the prices. I sent it to the right. And that's how I got the weekly levels today. So with the strong breakout on Monday, it's very rare that we see two. If we have an expansion bar, sometimes we would see like a pause. Here we had a breakout and then a bigger one, but we could see previously a lot of breakout bars had like a pause before we broke out again. So what I mean by that is like, look, this is steady, this is orderly, breakout, pause, slightly up, pullback, we go again, deep pullback, we go again, pause, bars, pullback, and now we're breaking out, strong bar, going sideways, higher, and we break out again. So maybe we go sideways and then higher, or maybe we go sideways and down. We are in a bull trend. The market is trading higher. We are above the higher time frame EMA. This is a higher low bull flag right here. Remember, breakout mode is a triangle. Three pushes up. So 1, 2, 3, 4, 5, and a breakout. Really cool day. I hope you guys made some money today. I know Apex had a 1-day sale or something like that, so I'm sure a lot of people are getting funded. That's great. The market has to travel another 40 points to complete the measured move of the breakout of last week's range. I think that is doable. We have FOMC on Wednesday, so when you see this, it'll be tomorrow. We have FOMC. be careful. Trade small. Trade 20% of your normal size. Use your stop loss, or don't even trade it. You know, we're gonna have moves, so just be cool about it. Please don't blow up your account. I've been dancing with the devil in terms of my account being blown up today. Helped me out a little bit. But yeah, I hope you guys are doing good. Hope you guys had a good weekend. Thank you for the support. I love reading all the comments. I hope you guys are getting some value out of those book reviews. I'm gonna keep them up every 2 weeks. I'll drop one on a Saturday. Thank you for your support, everybody. I drop these videos every day at 3 p.m. Thank you for following me. Thank you for watching the videos. Have a good day, everyone. I'll talk to you tomorrow. Bye.